The Adam Smith Awards are recognised globally as the industry benchmark for best practice and innovation in corporate treasury. With this podcast series, we're going to take a deep dive into each of the winning solutions of 2021 and hear from the creators who made it all happen.
Hello, I'm Meg Coates, Joint Publisher and Head of Operations at the Treasury Today Group. In this episode, we speak to the overall and highly commended winners of our Best ESG Solution category. This category looks across the range of the E, the S and the G. We focus on sustainable projects, including the finance related to the mitigation of and/or adaptation to climate change and CO2 emissions, as well as investment strategies which incorporate ESG and CSR factors, and solutions which relate to the achievement of sustainability-linked KPIs. And the overall winner of our Best ESG Solution is Marco Simi, Head of Investor Relations, and Dilip Sanghavi, Senior Manager, Corporate and Structured Finance at Etihad Aviation Group. Huge congratulations.
My name is Daniel Tromans. I'm Group Treasurer at Etihad Airways and overall winner of the Best ESG Solution in the Adam Smith Awards 2021. Winning the Adam Smith Awards is a huge honour and something that my team and I are incredibly proud of. As finance professionals, we don't often get opportunities to support ESG initiatives, so it's a great privilege to have been recognised for our collective efforts in delivering the world's first transition sukuk and the first transition finance in global aviation. Etihad Airways has been a leader in sustainable aviation, with pioneering initiatives such as the iconic Greenliner programme and the Eco Demonstrator. Etihad was also an early signatory to the United Nations Sustainable Development Goals and has championed numerous ESG initiatives, including single-use plastic-free flights, anti-wildlife trafficking campaigns, and extensive research and development into sustainable aviation fuels. In 2019, we closed the first financing linked to the United Nations Sustainable Development Goals in global aviation. As we moved into 2020, we saw at Etihad an opportunity to raise capital to support our own energy transition. The transaction had a number of unique characteristics. It was an Islamic structure, for example, and was also the first transition finance in aviation. However, what really set this deal apart from the precedent transition transactions was the fact that the Etihad deal had commitments to both the use of proceeds, but also to a sustainability-linked KPI. Well, firstly, we specified that the proceeds of the $600 million issuance would be used to finance investments in our next-generation aircraft that would improve energy efficiency and also fund research and development into sustainable aviation fuels that will improve, ultimately, the efficiency by up to 80%. Secondly, an incentive mechanism was introduced that aligned the commercial terms of the transaction to Etihad's own performance in actually reducing our emissions. Specifically, a firm commitment to a 20% reduction in CO2 per revenue tonne kilometre across our fleet by 2025. The process was managed very well. We worked very closely with a number of institutions, including Standard Chartered Bank, HSBC, First Abu Dhabi Bank, Abu Dhabi Islamic Bank, Dubai Islamic Bank, Mashreq Bank, and Emirates NBD. We developed and published our own transition framework, and Vigeo Eiris provided a second-party opinion provider. Clifford Chance were our legal counsel. The deal also included a successful liability management exercise, which was well subscribed and allowed us an opportunity to strengthen our balance sheet. We engaged with over 150 investors, including many green and ESG-focused funds that we hadn't had a relationship with prior to this transaction. Fitch rated the issuance as A-rated, in line with our corporate rating, and Vigeo Eiris assessed our transition framework as robust. All in all, it was a successful transaction and hopefully the first of many in this space. Finally, I would like to thank the judges for recognising Etihad's achievements and also to congratulate the other nominees for some excellent transaction over the course of the last 12 months.
Next up, we have our first highly commended award in this category.
The first is Nicolas Vaniet, Head of Financing and Treasury Front Office at Holcim.
Hello, my name is Nicolas Vaniet. I am Head of Financing and Treasury Front Office at Holcim, formerly Lafarge Holcim, the world's global leader in building solutions, on its way to becoming a net zero company. We are delighted to be a highly commended winner of the Best ESG Solution in the 2021 Adam Smith Awards. At Holcim, we are very proud of this accomplishment, as it's a great recognition of how innovative we have been on sustainable financing and liquidity management. The ESG commercial paper program we have implemented with NatWest Markets is an integral part of a comprehensive sustainable financing and liquidity management strategy we had designed 18 months ago. The strategy was built around 5 pillars which cover all E, S, and G considerations. Number 1, proactively communicating with bond investors, credit and ESG rating agencies on our sustainability strategy, policies, and efforts. Number 2, identifying a way to invest any temporary excess cash in a responsible and sustainable manner. Number 3, linking the cost of our credit facilities to our ESG rating performance. Number 4, preparing a sustainable financing framework and issuing sustainability-linked bonds to help the company reaching the most ambitious carbon footprint reduction goals in our industry. And number 5, last but not least, designing a way to link our short-term funding activity to our sustainability commitments. The ESG commercial paper program we structured with NatWest Markets is the solution addressing the 5th objective. The key challenge of the project was that while sustainable financing had been a well-established concept in the loan and bond markets, it was a far less developed solution in the short-term funding space. Only very few precedents existed, and most of the mechanics developed for long-term financings were not suitable to the commercial paper market due to its fast-moving and short-dated nature. Despite these challenges, our role as the global leader in innovative and sustainable building solutions was to find a way to overcome them and lead the way on all fields of sustainable finance in our sector. The key elements of our solution consisted in leveraging our very strong ESG ratings from Sustainalytics and demonstrating to commercial paper investors that we were committed to continuing being a leader in this field. In practice, the ECP notes issued may only be designated as ESG notes for so long as Holcim is rated by Sustainalytics within the top 25th percentile in our sector. Otherwise, this is not possible. We are also committed to maintaining a rating with these ESG rating agencies and publishing its report on our website. If we fail to meet these requirements, we will need to communicate it. The reputational incentive to remain at the forefront of our industry in terms of ESG rating performance was seen by NatWest and by ourselves as the most appropriate way to showcase our commitment to sustainability in the context of a short-term financing instrument. Our solution was indeed the first ESG rating-linked ECP program set up by a corporate, and the first issuances of our ESG notes were immediately well received by investors, which helped the development of ESG features into the European commercial paper market.
And now we have our second highly commended award winner.
The second highly commended winner is Tom Gerritsen, Head of Treasury and M&A at Royal Schiphol Group.
Hello, I'm Tom Gerritsen, Head of Treasury and M&A within the Royal Schiphol Group and highly commended winner of the Best ESG Solution Award. Winning this award has been perceived by the Treasury team as well as the company as a compliment and an additional motivation for putting in place an ambitious and well-aligned financing policy in relation to the industry-leading ESG strategy. The mission of Royal Schiphol Group is to own and operate the world's most sustainable high-quality airports. And via a thoroughly structured green bond framework, Royal Schiphol Group has been able to raise dedicated green funding to finance this mission. Temporarily being able to place the funding into well-yielding ESG money market funds ensures a green investment loop, further adding to the important ESG ambition of our company. The largest challenge that we have to address remains to continuously convince our broader audience on the larger ESG mission of the company and the specific value add thereof. We do not shy away from the fact that we are an airport operating company and thereby we are part of the larger aviation industry. However, we do have a story to tell, whereby we recognize and act on the responsibility to carry out our activities in a well-considered, balanced way for all stakeholders. We aim to reduce our negative impact as much as possible and positively influence sustainable behavior of our clients, such as airlines, business partners, and peers, to trigger industry-wide movement. The biggest learning point is that the broader topic of ESG, also in relation to funding and cash management, remains in constant flux. Regulation and guidelines on structuring and reporting, for example, are not set in stone, and therefore you should constantly stay abreast of the developments and provide input where possible. At the same time, the range of ESG-conscious financing and cash management solutions is currently widening and provides additional opportunities to add broader sustainable value, next to our own sustainability efforts and strategy.
And now it's time for a word from their partner.
Hello, I am Patrick Zwolle, responsible for the Benelux region as Vice President at BlackRock Cash Management. The team at Royal Schiphol Group was familiar with money market funds and already recognized the benefits they can bring for the proceeds of a bond issue, including instant diversification of assets, high credit quality and access to daily liquidity. However, since their inaugural green bond issue in 2018, the market has seen the launch of several new and innovative solutions that also incorporate ESG into the investment process. As green bond issuance reached record levels in 2020, we increasingly saw demand for sustainable, short-term investment solutions to place the proceeds. Corporates have been keen to create a green investing loop before allocating the funds to the longer-term projects they have identified to transform their business. As soon as I saw that Schiphol were coming to the market with another tranche of their green bond, I immediately recognized that this application might resonate with their ambition to create the world's most sustainable airports. I helped the team understand the differences in BlackRock's approach in our sustainable range of money market funds to make sure this was synonymous with Schiphol's investment objectives. And given the timelines involved, we then worked quickly to make the sustainable money market fund solution available to them. BlackRock has been passionate about the evolution of cash offerings to include ESG for years. We started by incorporating ESG considerations into our investment process in 2018 and launched our global sustainable range of money market funds in 2019. Royal Schiphol Group are trying to build the world's most sustainable airports, so it was only fitting that they were keen to overlay an environmental lens in their investment solution to further strengthen this commitment to the green movement. There are 3 features of these new funds that help Schiphol to reach their goals. Number 1 is a set of exclusionary environmental screens. BlackRock removes short-term issuers that are involved in certain activities, including the production and distribution of tar and oil sands, thermal coal extraction and fossil fuels. And there is also a commitment to not invest in any issuer that has been involved in violations of the UN Global Compact. Number 2 is a unique credit approval process. BlackRock tilts the portfolio to those issuers with above average environmental practices. And to determine eligibility for the portfolios in our proprietary models, we combine independent ESG data, risk metrics and ratings. And number 3 is a quantifiable investment in a better environmental future. A commitment that 5% of the net revenue from BlackRock's management fee is used to purchase and retire carbon offsets. As one of the many important investors, Schiphol's investment has contributed to the successful offsetting of 120,000 tons of carbon in the most recent financial year of the fund. This is the equivalent of planting nearly 160,000 acres of forest. While achieving their green goals in their short-term investment, Schiphol were able to achieve their fundamental liquidity investment objectives, including yield. They have also found a product that had sufficient scale to help manage their overall exposures. It was basically a bit of a no-brainer. We expect green bond issuance to continue to grow, and we believe there will be more companies looking to replicate Schiphol's investment strategy.
And the third highly commended award winner?
And our third highly commended winner is Christian Auer, VP Corporate Finance at Dürr AG.
Hello, I'm Christian Auer, Vice President of Corporate Finance and Treasury at Dürr AG, and we have been recognized with the highly commended winner award in the category of Best ESG Solution. Winning the award has once again proven to the Treasury team that ESG is a very important topic for the company and our investors, and that we are on the right track to make this a Treasury priority. We will stay in close contact with investors to communicate our sustainability strategy and to make sure that we learn early on about new requirements from capital markets and regulators that we should adapt to. Additionally, the whole team takes it as an encouragement to keep going down new routes if these new routes might offer a solution to an old or a new problem. The biggest challenge we had to manage was the uncertainty of how investors and stakeholders would react to the new product and its embedded mechanism. Before going to market, we had tried to get a feedback via pre-sounding from investors, which came back with mixed signals from absolutely enthusiastic to no-go. We have then aligned internally and still decided to take the jump into cold water and go ahead with the transactions. Luckily enough, the investors then have been extremely positive in putting in orders at large scale. The biggest learning for us was probably that ESG is a complex topic, which requires plenty of communication internally as well as externally. When understood, however, it begs investors' interest in the company. In addition, it puts a spotlight on sustainability and related KPIs internally, which in the end supports executing the group strategy in the area of ESG.
A huge congratulations to all our Adam Smith Award winners. And thank you for listening to this episode of our dedicated Adam Smith Awards podcast series, brought to you by the Treasury Today Group. More episodes will be coming soon, featuring other award winners. So please subscribe to our channel so you can stay updated.